Cash, the undeniable source of power that provides income and access to all assortments in today's society. From purchasing the essentials in life to paying off bills, everything in life and most considers the use of cash. But does this mean you should be holding cash? Well, not necessarily. You see, cash is an underperforming asset that has depreciated over time. In fact, if you take the value of a dollar in 1920 and compare it to the value of the dollar in 2023, that same dollar will be worth $15 today. Now you see, this is mainly due to inflation. Now what is inflation? Well, inflation in simple terms is the rise of goods and services over long periods of time, decreasing the purchasing power of us consumers. This is why you see constant trends of prices going up each and every year. Like literally, the cost of gas can go from $3 a gallon to nearly almost $5 a gallon in 1 year. The whole point is that the power of cash only continues to decrease as noticed over a historical period of time. However, you as a consumer has the ability to utilize the power of inflation and rather increase your chances to fight against a depreciating asset with much more beneficial long-term assets. With that, let's dive into the first asset that is well known to generate a historical average return of almost 10% every year within the stock market. This is an index fund. An index fund is a specific mutual fund that has a goal of tracking the market's index such as the NASDAQ, the S&P 500, or the Dow Jones. These index funds alone can range from stocks all around the world to even just the top stocks in America that you alone can own all in one batch without having to purchase individual stocks alone and with little to any cost. This method has changed the game of investment within the stock market and has actually beaten well-experienced investors as it relies on mainly managing funds on a broader spectrum with less risk as opposed to purchasing individual stocks that pose higher risk to reward ratio. Another asset that is well known to be a hedge over the infamous inflation is gold. Gold is a physical asset that can either be acquired through certain securities, mutual funds, or actual physical coins, bars, and or jewelry. Gold provides a diversified form of investment to one's portfolio and at the same time is a safe security when it comes to market volatility within the economy. Some of the advantages of owning gold include safety of value and liquidity over a long time horizon, hedge against inflation as stated earlier that's protected by higher interest rates, diversity of assets for one's portfolio, and increased long-term financial success. With that being said, let's dive into the next appreciating asset known as treasuries. Treasuries are considered one of the best and safest investments of all time as they are fully backed and funded by the United States government. Treasuries that the United States offer can be T-bills. T-bills offer lower interest rates with a quick maturity rate that is guaranteed. Some advantages include zero risk of default, small initial investment of $100, and an investor can purchase and sell T-bills with little to any ease within the secondary bond market. With this, treasury bonds can be another treasury that the government offers. Advantages include risk-free assets, which means that your initial investment after maturity rate is guaranteed and safe. Steady income as T-bonds pay a substantial fixed rate of interest, and liquidity as T-bonds can be bought and sold across the secondary bond market. However, owning assets such as treasuries come with lower return rates, loss from not holding the treasuries to its maturity rate, inflation, and our interest rate risk. With this comes our next asset known as CDs or certificate of deposits. CDs are specified time deposits that are offered by banks or institutions such as credit unions while being backed by the FDIC, which guarantee the safety of your assets based on limitations. These assets are short-term yet can benefit an investor's wealth dramatically. The rules applied to purchasing a CD involve leaving a set amount of money with this financial institution for a certain time period. Some advantages of CDs come with fixed interest rates, higher returns as compared to normal savings account, and even a laddering option if given to continue to invest in a CD from one maturity date to another. There are some downsides such as inflation and flexibility of the asset, but CDs are another asset that can appreciate higher than leaving cash to do nothing. The final asset that can appreciate higher than cash over time is real estate. Real estate is another way in which an investor can diversify his portfolio into another physical asset. In fact, the housing market only continues to grow each and every year. I mean, look at the houses 10 years ago selling for an affordable price, but compared to today's prices, you can barely even own a house without being almost $1 million or more. Obviously, this depends on your living style and the state in which you live in, but the circumstances still showing an increase in real estate prices each and every year. From a market average of nearly 5.4% since 1922 to 2022, the highest growth rates of nearly 12% or more put real estate as a suitable candidate for your portfolio. Some of the benefits of owning real estate come with tax breaks as investors are allowed to deduct certain expenses for property or managing costs when owning a particular property or investing in such a property. Another is cash flow from rental properties leading to easy passive income. There is also price appreciation of property over time, and diversification in more than one asset leads to less volatility for your future portfolio of wealth. With this, the property value can hedge against inflation through capital gains as prices only get higher, increasing the value of that property. All in all, each and every asset has an ability to turn an individual long-term portfolio of investments into future wealth, which is higher than holding on to cash and watching its value slip each and every day. There is always risk when investing, and no investment is guaranteed. With that being said, this is not financial advice and is strictly only opinions, as financial media looks only to provide information for educational purposes. But it's up to the investor or individual to always seek advice from an actual advisor when investing. All that being said, make sure to like, comment, and subscribe below.